Hello guys and welcome to a new deep value video. Today we're going to deep dive into the financials of Microsoft Corporation, ticker symbol MSFT. Let's start with a brief overview. Microsoft is a company operating in the tech industry. This company is most known for the operating system Windows, Xbox, and its cloud business Azure. As of the 9th of August 2024, its stock price stands at $403 and it has a market cap of 2.96 trillion. Moving on to some key valuation metrics, the company's price to earnings is 34.1, while its price to cash flow is 25. Taking a closer look at the company's growth over the past 6 years, we can see that its revenue has grown by 94.7%, whilst its bottom line has increased by 124.5%. In terms of earnings per share, there has been a growth of 128.5%. However, it's also important to note the change in the number of common shares outstanding, which stands at 7.47 billion, reflecting a 2.8% drop. Additionally, the interest coverage ratio is 36.7, suggesting the company's ability to meet its interest obligations comfortably. Next, let's move on to the balance sheet, starting with the quick ratio, which is calculated by dividing current assets minus inventory by current liabilities. We see that this stands at 1.26. This ratio helps us understand the company's short-term liquidity position. Looking at the long-term debt to equity ratio, we find it at 0.16, and the overall debt to equity ratio at 0.9. Now, let's transition to the cash flow statement. Cash from operations is 118.5 billion, reflecting a change over the past 5 years of 127.1%. Meanwhile, cash from investing activities is 97 billion, showing a change of 514%, which is mostly caused by their huge increases in AI investments. Furthermore, their cash from financing activities is 47.7 billion, and that is a change of 2.3% over the same period. Lastly, free cash flow has grown by 93.4% during the same time, from 38.3 billion to 74 billion. It is projected to grow to 92 billion in fiscal year 2025. Moving forward, let's look at the return metrics to see how well the company is utilizing its resources. The return on equity is 35%. The return on investment is 29%. The return on assets is 17.2%, both indicating how efficiently the company is generating returns from its investments and assets. And lastly, the ROIC, return on invested capital, stands at 20.5%, a crucial metric for understanding the effectiveness of the company's capital allocation. Let's end our analysis with the fair value. By our first method of finding the fair value is conducting a discounted cash flow analysis. By using a discount rate of 10%, a revenue growth rate of 12% for 10 years, and a perpetuity growth rate of 4.5%, we get a fair value of $307. Secondly, using a multiples valuation of 20 times trailing price to earnings, operating cash flow, and 25 times trailing for free cash flow, we get a fair value of $267. Thirdly, the analyst target price is $503. Putting it all together, we get an intrinsic value of $359.2. And using a 15% margin of safety, we get an acceptable buy price of $305, suggesting that the stock at the current levels is overvalued. To wrap up my analysis, I would rate Microsoft as a hold. Personally, I would consider investing in it only if its price dropped to sub 310 levels so that I can get a good price. Thank you for watching. If you found this video helpful, please like and subscribe for more deep value analysis. See you in the next video. Bye.